All right. So, good evening, everyone, and thank you for sparing time on a Saturday evening to learn about this subject. As we have done a few seminars earlier along with Taxmann that UAE Corporate Tax and the intricacies of the corporate tax we have covered earlier. Today, we thought we want to be specific and we want to enlighten or discuss about one of the tricky concept under the UAE corporate tax law, which is about the free zones and the taxation of the free zones under the corporate tax. So, as you are aware, this is of course a subject which is one of the few subject which is slightly trickier from a UAE point of view, and therefore also very important to understand in detail as to whether it will apply and to whom it will apply. We are going to cover all of this in our session today. And more importantly, our idea is to simplify this for you so that you actually take home the points that you need to see how best you apply this concept and what is the understanding that you have. And of course, to sharpen your understanding or add to your understanding. Now, also, I'm not sure how many of you are aware, but there have been changes in the way it was proposed in the beginning and from the way it is now being implemented. Um, Therefore, we thought that this is an important topic which we should kind of touch upon and highlight. These are the 5 or 7 topics that we are going to discuss. Overview of recent developments, conditions of the free zone person. What do we mean by adequate substance? Core income generating activity and its outsourcing, determination of qualifying income and income derived from immovable property, and then some practical issues that we face today, right? Now, I don't know how many of you are following this very closely, but uh, initially, when the public consultation draft came out for the corporate tax law, it just said that there will be benefits for the free zone. And therefore, everyone thought, okay, so now free zones are not going to get taxed. Then, when actually the law was issued, um, they said that it will be benefit will be available subject to conditions. So then we said, okay, so now we have free zone. Now what will become, qualifying or subject to condition? What are the condition? And therefore they came up with the concept of a qualifying free zone person, where they added certain condition. But then on top of it, when the actual ministerial decisions were issued in June, they added that it is only eligible for certain activities and not for everybody and anybody. Now, this is important to understand because UAE, being a small country, has about 45 free zones, right? And it's not quite justified. Particularly, the free zone was used mainly for allowing the 100% ownership to expatriates, and therefore that was very relevant at a certain point in time. Of course, now with progression in the law and evolution, you can own the companies 100% even in the mainland, and therefore that attractiveness only for the ownership purpose has not been there. So almost 60% or 55% of UAE GDP is generated through this free zone operations, albeit of the private sector and others. And therefore, if there would have been a law which exempted everything on that side, that would not have met the real meaning of introduction of corporate tax law. Then it was very easy. Somebody could set up in free zone and take the 0% benefit, right? So they had to carve out or create some kind of a framework within which one could then operate and get certain benefit, and not everybody will get benefit, right? So by default, the way it has been done now, okay, so then on 1st June they issued two ministerial decision. They identified few things. Then again, there was a need that no, this is what you've done is not enough. So they issued a public consultation document in July. And then after review of the comments that came out of public consultation, they have replaced the earlier two decision by a new two decision set of decision in November of 23. So this, as a result, has kind of made certain things which were there earlier redundant, and also certain new things have come. We'll go through those changes later on, but let me first take you through the basic construct of how the free zone benefits are actually available. So Article 18 of the corporate tax law is the basis on which the free zone benefits or to a free zone person are being granted. Then, of course, public consultation decision, and these are the two: one cabinet decision and a ministerial decision, which lays down the exact mechanism of how do you apply this benefits or how do you read this benefits. So we have to read all these three in conjunction together to make sense out of this important points. So there are two first things: that free zone is a designated and defined geographical area. So every free zone has a designated and defined geographical area within which they are supposed to operate and limit. And a free zone person is anybody who has registered and is operating in that. And even if you set it up as a branch, you are also operating within the free zone. And therefore, you are also looking at this entire concept as a free zone person, right? Now, there are two things important. So if you are a free zone person and if you are going to take the benefit as a free zone person, there'll be 0% rate on the qualifying income. We'll come to what the qualifying income will be. And if we have certain income which are non-qualifying, that will go under the 9% rate, right? And therefore, a free zone will not get the basic threshold which is otherwise available to other taxable persons, right? Having said that, now these are the main and important conditions. So, from a free zone person, anybody who is registered as a company in a free zone or a branch in the free zone, to become a qualifying free zone person, to even think of getting a 0% rate, there are conditions. First and foremost of that is having substance. So today, a lot of companies in the free zone operate without having proper full-fledged office or having people. And it's allowed for them to operate like that and book transactions and have bank account and rotate funds on that basis. Going forward, they are saying that if you want to continue doing that, will not give you the tax benefit. But if you are a company which is genuinely operating in a free zone, having office there, having people who have visas from the free zone, they sit in that free zone, they operate there, and they actually conduct your business, then we will give you the benefit. So first and foremost condition is substance. And again, we'll go into more detail on that. Then you are deriving income from a income which is of a qualifying nature. So any income which is from a qualifying activity is qualifying income, right? You're not elected to be subjected to the 9% corporate tax, right? You follow with transfer pricing and any of your related party transactions are at arm's length. And there are two more conditions that you have to audit your books of accounts and your non-qualifying revenue does not exceed the de minimis requirement. And we'll see what de minimis requirements are. What happens is that if you do not meet any of these conditions, and this is the most critical part, that if you don't meet it in this year, you will not be entitled not only for this year, but also for next 4 years. You'll be disqualified from claiming the free zone benefit. Okay. And therefore, you need to be very careful whether you can actually do that. And if you elect to be subject to general tax rate, then in that particular year, you're taxable at 9%, right? So this is where the most important decision is, that if you are going to meet all of these conditions and that of an audit and the de minimis requirement which we fulfill, If you are very, very sure that you are going to meet and fulfill this requirement, then only you should opt for this. If you by mistake opt for it, then you can't fulfill, then you are disqualified for 5-year period. You cannot get that 0% rate, and you cannot even then go under the normal tax rate also. So you have to pay 9% on all your income, right? So this is very important for one to understand that actually it is an important evaluation that whether I'm going to fulfill these conditions or not, which is the basis for me to be eligible to claim 0% tax rate. Okay. So what do you mean by substance then? So one, I'm deriving qualifying income from the specified activities. Second, I have not elected to subject to tax. I'm following transfer pricing and I'm meeting any other condition, all other conditions are there. The substance is defined to mean that one, I have adequacy, which means that I have adequate assets in the free zone, I have adequate office space, I have adequate qualified full-time employees in the free zone, and I have adequate operating expenses. So if I have all these three, I need to carry on the core income generating activities, which are most directly relevant to my income generating or qualifying activity that I'm trying to do that. If I meet this two parameter, then I can say that I have adequate substance. So again, an evaluation that for what type of activity, what is the level of substance you will need is open. But that's something that you will have to determine, document, and then decide and then offer your tax accordingly or do the compliance accordingly. So this is the most critical aspect or the core basis of evaluation whether you can get free zone benefit or not. Okay. Of course, this is subjective, and therefore, depending on the facts of your case, the adequacy or level of substance could be different, which we are not denying. But that has to be evaluated first very, very carefully. Because if you don't meet this, then you lose the benefit for 5 years. Right? So just to give an idea, if you have a flexi desk, just a desk available and which you use sometime, or you don't end up using a lot of time, then of course it will not suffice as having adequate office space available to you. Similarly, if you have no employees or visas being issued from the free zone, then again you will be called upon to say that you don't have adequate full-time people who are managing the business from the free zone, and therefore you are not allowed to take the advantage. Then if I'm an so here in the free zone, there's a concept of an offshore entity. What do we mean? It is registered as a company in the free zone, but it's not issued a trade license, which means that the company is there, but it is allowed to do business mainly with companies, parties, or transactions which are outside of UAE. And that's why it's called an offshore entity. Such offshore entity are not allowed to have office because they are not supposed to be doing business here, or they are not supposed to be having employees here, right? So it's a lighter version of a free zone company where you're allowed to do business outside of UAE with that structure. But if you have that structure under the tax law, then of course the entire benefit of whatever you're earning there, you can never claim a 0% because you cannot have an office, you cannot have employees there. So again, a lot of people have used this to hold investments, to hold properties and all of that. They need to relook at this aspect. If you don't have substance, you will not be able to benefit from the 0% rate, and you cannot create substance in an offshore setup, right? Now, more importantly, is that what are they saying is that core income generating activities must be conducted in the free zone, right? Or designated zone, wherever it is applicable. We'll come to what is free zone, what is designated zone in a little while when we look at activities. So you have adequate asset which is required, adequate number of qualified employees required, and adequate amount of operating expenditure. They are also saying that you can outsource this to another person, but also in the same free zone or designated zone as may be applicable. And that has to be under a proper supervision. So whether you outsource or you do it yourself, it has to be done at the same free zone or designated zone as is required. And therefore, this is the most important part, that you need to carry on those specific activity in that free zone to claim the benefit. Okay. And what is core income generating? It could be different for different businesses, right? Depending on your business, you can define. So if we say that we want to outsource, then I can outsource the distribution activity and its SIGA to another company, but also to be in the same designated zone. So Javza, instead of Javza, I do it in Fujairah, fine. Both are designated zone, so it is fine, and I can do outsourcing with the supervision, and I'll still meet the conditions. But if I go from Javza outside into a non-designated zone like a DMCC, which is in like any other free zone, then that outsourcing may not work, right? And therefore, we need to be careful of where do you outsource also. It has to be to another designated zone if the condition requires it to be designated zone. If the condition is any other free zone, then any other free zone is fine. So in distribution case, which we have taken here particularly and purposely, the condition mentions that distribution needs to be carried on from a designated zone. And therefore that outsourcing can also be to such designated zone only, right? So if you have understood so far, these are the conditions which makes you from a free zone to a qualifying free zone person. Now we need to look at what are the activities or the source of income or the turnover which will benefit from the 0% rate. So there we come as to what do you mean by a qualifying income. The qualifying income are the income derived in three counts. When you derive it from another free zone, or you derive it from anyone else, which is a mainland company or an export, and when you're owning qualifying intellectual property. So if these three are there, then any income which has come from these three are then meeting the requirement, and therefore that income goes into qualifying income, right? So we'll have to look at each of these three. We'll also see the changes that happen or expansion or removal that happen. So first is any transaction with any other free zone, right? Just a second. Yeah. So when we talk about free zone person, what we are concerned with that here, any transaction between two free zones can take place as long as they are not something known as excluded activity. So what is an excluded activity is here that if you're doing banking, if you're doing insurance, if you're doing finance and leasing, if you're doing ownership and exploitation of immovable properties, or um, when the transactions are with natural person, except for transaction in relation to this 3 4 item, then all other transactions with natural person are also excluded. So you have to actually examine that are you into any of this activity. If you're any of this activity, then whether you deal with another free zone person or not, your income will always remain taxable. If you're not carrying on this excluded activity, then any transaction with the free zone, either for goods or service, is entitled to a 0% rate, subject to the de minimis criteria, which we'll go into detail after this discussion, right? So that is the first limb. That here we are on the first spot that it is an income derived from a free zone person. It could be anything related to goods or service, and it should not be any activity of excluded nature, right? If you meet these two criteria, then any income and any turnover with that is qualifying for 0% rate. Next, if you then deal with anybody in the mainland or anybody outside of UAE, right, not a free zone person, then it should only be in relation to qualifying activities. These are the qualifying activities. In terms of goods, there are four: manufacturing, processing, trading of qualifying commodities, and distribution of goods from designated zone. There is another one which is holding of shares and other securities for investment purpose. Then services, there are seven or eight. One, ownership, management, operation of ships, reinsurance service, fund management, wealth management. Then headquarter and treasury service are included, and financing, leasing of aircraft is included here, and logistics services. So if you are in any of this 13 activity, only then, if you deal with a non-free zone person, which is an you export these services or goods, or you deal with a mainland customer, then only in this case you will get the benefit of 0% rate, not otherwise. And the third limb is the income derived from ownership or exploitation of qualifying intellectual property, and we'll go into that detail separately. So let's look at some more detail of what is this qualifying activities, and where do I fit in and how, you know. So we are saying that first, if you are dealing with free zone to free zone, it needs to be activity which are not excluded, and therefore you get the 0% benefit. If you deal with natural person, then it is generally non-qualifying except for three or four exceptions which are made in the law, right? And then if you deal with mainland or foreign company, then you need to be dealing in qualifying activities. Okay. So if you deal in qualifying activity, this 13 of them which we saw just now, then only you get benefit as a free zone person to get 0% rate. Okay. I know it's a bit complicated, but we are trying to, that's why I simplify with these examples for you. If you understand it with a certain background, then it will be easier for you. Then go. So if you are a free zone person and if you are carrying on distribution activity, right, then you have to carry on if that activity is taken from designated zone, then only the benefit of 0% is available. Then you can deal with another free zone person, you can deal with foreign entity, and you can deal with mainland person. Okay. So all of this needs to be met, then only you can take the benefit of the 0% rate. So in case of service activity, okay, either you rendered services to a free zone and your entire turnover is only that and you meet de minimis, then you get the benefit, or you're rendering services to mainland person or foreign entity and you are in one of those eight services which are qualifying services, or you are rendering services to a natural person but only in respect of fund management, wealth management, aircraft, and ownership of the ships. You know, so only if it is this, then you get benefit. Anything other than this will not get benefit. Okay. So again, we are trying to give you with an illustration so that for goods, this is the criteria. For services, this is the criteria. What is de minimis? De minimis is basically an overall overarching condition which are limiting the benefit, and therefore they are saying that any of this has to be 95% or more of your revenue. If you have by chance some other revenue of up to 5 million dirham or 5% of your revenue, we will ignore that. But if you have anything more than that, then you lose the benefit on the entire pie. It's not that this will get taxed. The entire income from entire activity which is otherwise qualifying will also get taxed. Okay. Therefore, we are saying that the intention to give the benefit is to limited people. It's not that anybody and everybody can take the benefit. And those who strictly adhere to the condition that we have outlined, then only they can get this benefit. And therefore, the entire turnover of their business in that entity has to be from any of this. If you don't meet any of this criteria, then you don't meet the conditions, and then you are disqualified not only for the current year but also for the next 4 year, right? So non-qualifying revenue is those which are not qualifying income, but that has to be within this limit. if it is within the 5 million, if you had FD and you earn interest of 1 million, which is part and parcel of your business, no problem. We'll overlook that. But if that interest becomes instead of 1 million or 6 million, then we'll not overlook. Okay. So that's the message and that's the condition, and that's how one needs to apply this entire subject matter. Okay. And of course, the beneficial recipient condition also is very important. That anybody who is just interposed for the purpose of taking the benefit, then you will not give you this benefit to them. You have to be a beneficial owner in your own right, and you're not acting on behalf of somebody to take this benefit. Okay. So these are predominant conditions that one needs to look at. And therefore, again, if you just to emphasize one more time, if you fail to meet any of this, then you are also losing the benefit for next 4 years, right? So it's just an example, just to drive home the same point, that if you had a turnover of 100 million, out of it, non-qualifying revenue is only 4 million. So my total turnover is 104, and 5% of my revenue is 5.2 million. But my non-qualifying revenue is only 4 million. Therefore, the entire 104 will be qualifying revenue, qualifying income. I'll not pay any tax on that entire amount. In the second example, when it is 80 million and the qualifying non-qualifying revenue is 6 million, then I'm crossing the 5% threshold. Then my entire 86 million is taxable at the rate of 9%. Okay. So just to highlight the importance of this 5% condition. 5% of turnover or 5 million. So you're though below 5 million, you're exceeding the 5% condition, and therefore you'll be disqualified. Right? Now, when it comes to immovable property, there's one specific exemption, that if you are a free zone person which owns commercial immovable property, which lets out to another free zone person, then only we will give you a 0% rate. But if you let it out to a non-free zone person, and if the property nature is not commercial but any other like residential or hotel or any of the sort, so all of that is then not getting any benefit under the 0% regime. Okay. And similarly, and therefore, one more thing is that if you have this kind of immovable property rental income, it's directly a non-qualifying income, and that gets taxed at 9%, but that is not included when you are applying this de minimis criteria. So that's to be treated separately outside this de minimis calculation. Okay. So similarly, if you have a domestic or a foreign PE, and if you have income attributable there, that also will get separately taxed. Okay. So here they also given further benefit that if you have a free zone and if you want to bifurcate that, okay, I have some business which is going to get taxed, I will create a domestic permanent establishment, a branch, where the taxable business will be carried on. So you have freedom to do that also. And as a free zone person, you continue doing your qualifying activities in the free zone. Those which are going to be taxable, I'm doing it in the branch. I have to maintain two separate books of accounts, and any transaction which I do between the two are also to be done at arm's length. Okay, so that, and I have to keep the two separate books of accounts. Both needs to be audited in this case because it's part of the free zone person, and therefore I can still have that carve out that if I have income there, I'll pay 9% on that, but only on that, and that will not come in my overall calculation of de minimis threshold. So this is important. Again, this option exists, and you can take benefit of this option very easily. Okay. And like I said, the immovable property income is generally taxed. It's not taxed when only if it is in relation to commercial property and it is let out to another free zone person only. So if it is both this condition, then you get 0%. Otherwise, everything else, which is not a commercial property, let out to a non-free zone person, all of that will get taxed at 9%. But again, that will not be part of the de minimis calculation. That's an advantage that is not going to impact your overall qualifying income and total income calculation, but it will be taxed directly. So again, a careful planning and looking into detail of all of this is a must. Otherwise, we will end up making some errors here. So like we said that if it is a business center or a warehouse or an office, that's regarded as a commercial property. But if it is a hotel or a residence, then that's not regarded as a commercial. So what happened between the June and the November is that when we got two new cabinet decisions repealing the earlier two, they updated the list of qualifying activities and they added a few things. Then they provided clarification on some of the requirement of the substance and all, and how to calculate de minimis threshold and all of those things. And then incidental income part was removed and competent authorities were defined. So this was some of the changes that happened between the earlier decisions on free zone and the new decisions on the free zone. Okay. Now, therefore, there was one very important two new activities were added. One in respect of trading of qualifying commodities, and second in respect of ownership or exploitation of intellectual property. So, mind you, friends, that earlier any income from IP or intellectual property was outside the purview and was part of excluded activity from free zone perspective in the earlier two decisions. This decision, the new two decisions which repealed the earlier one, has now included them as one of the qualifying activities. So it's very beneficial now that certain type of intellectual property income and not trademark and all related are now eligible for a 0% rate, and which will therefore encourage people to conduct actual R&D activities in UAE. Okay. How many of them will actually happen here, and those who can take benefit will be, of course, limited, but there will be some. Okay. Other is the trading of qualifying commodities. So here, what they said that if you are going to deal in any of the commodities or metal or mineral or energy products, and any of them are traded on a recognized exchange, I wouldn't use the word stock exchange. It would be more like commodity exchanges. So if it is on any of the recognized exchanges, then I will give you the benefit of 0% rate. So if you're dealing in coal, if you're dealing in oil, if you're dealing in sugar, if you're dealing in coffee, you're dealing in tea, and these are all exchange traded commodities, then and the prices are fixed also with reference to that exchange, then we will give you the benefit of a 0% rate if you're trading in that. And if you do, excuse me, even if you do any of the underlying trade, which is on to hedge the risk related to this physical trading, if you're undertaking the derivatives related to that, then we will give you benefit for that as well. So two things: any trade in qualifying commodities, physical trade, and also the associated hedging trade for those physical trade, all income from that you will be able to claim 0%. Okay. But again, it has to be a commodity which is exchange traded and not any derivative of that, or not any other point of commodity. So it is not extended generally to everything that you trade in, but only to specific those commodities that you trade in. Okay. So just an example here, that could be gold bars or gold bullion, silver bars, platinum, natural gas, coal, crude oil, like I said, tea, coffee, sugar, and some of those things. Okay. So any of them which are traded on a recognized commodity exchange, we can extend the benefit of this decision and 0% rate both to that. Okay. Second thing that came in is ownership and exploitation of intellectual properties. Now here they were very, very clear to say that it does not include trademarks. And therefore it has to be something which is equivalent to a patent, and it is to be in relation to certain dedicated R&D activities which are being carried on. Okay. So if you are doing that, then of course you are allowed to uh, get a 0% rate on such income as well. And here they have provided, like in India, the upliftment of the expenditure. So whatever the expenditure, you uplift by 30%, and you take the proportion of the total income, total expense to that, and you get the benefit of the tax deduction for that total proportion that you do. So like in India, we have research and development where we have enhanced deduction available. Here also they've enhanced it by 30%. Your actual expense, so 100 will get enhanced by 30%, 130, and then you compare this ratio, and that becomes your qualifying income, which is eligible for 0% rate, right? There are more nitty-gritties into it, which I'm not going into it because of the paucity of the time that we have, because I also want to keep some time for some Q&A from your end. Uh, Change in the definition. So ancillary activities were defined very clearly that now it is necessary for the performance of the main activity. It's closely related to main activity. It should not be regarded as a separate activity. And those can only be regarded as ancillary. Okay. And further clarity came about in holding of shares and securities, where they have added the word investment purpose. The last two word investment purpose has been added in the new cabinet decisions. And therefore, they want the 0% rate to go on any income from such investment only if they are held for 12 months or more. So you have to hold the investments for 12 months or more, and then you can get every gain or every benefit out of that investment to go into a 0% rate category. So again, beneficial, but limiting. Because if you want to hold it for 12 months, most of the portfolio investments which people do will not fall in that criteria. Distribution of goods, the languages will remain same from the last time, and it's therefore has to be in or from designated zone. And buying and selling of anything, there's no condition of a qualifying commodity only. And if they are imported, they have to be imported through the designated zone as well. So what are these designated zone? These are nothing but custom bonded free zones. So there are 45 free zone in UAE, but only 20 out of them, which are listed here, are custom bonded. Therefore, the entry and exit of goods are regulated here in this area. So if you are in any of this area and you have a company there, then any trading that you do from there will be eligible for a 0% rate. Okay. So the biggest question still remains open is what happens to the high sea sales or third port shipment where goods do not enter UAE. Earlier, FTA had mentioned this in their public consultation document that they are still okay to give this benefit. However, this public consultation is it's not part of the law, and it is not part of any clarificatory guide. And therefore, to what extent we can rely on that remains to be seen. It would be a good argument to take, but may not be if they're not specific, clear mention in the law to that effect to give that benefit. Okay. So with that caution, I want to say whether you're meeting the distribution conditions or not is something that one needs to look at for the manufacturing. So this is the one flow chart that summarizes all of the different type of income for the free zone and what happens to that. And it gives all the relevant conditions attached to it. If you need this, just drop in an email to us and we'll try and send it across to you. Okay. So you would go through this 5 steps. Are you a free zone person? So if you're a company registered in the free zone, Then are you meeting all those 5 or 6 condition of substance and others? Then you become qualifying free zone person. And if you are qualifying free zone person, then you have to see that are you doing a qualifying activity or you're dealing with a only a free zone person. And therefore you have to see that then you earn qualifying income, and your non-qualifying income does not exceed the de minimis threshold of 5% of 5 million of the turnover, right? And therefore then you come to conclusion whether you can get 0% rate or not, right? So with this, these are my details. And one more important thing that I want to highlight to all of you, that along with Taxman, we have partnered and uh, authored a book on corporate tax. Let me just find out where I can. Yeah, so if you go on the Taxman website, you can find the book Law and Practice uh, relating to UAE Corporate Tax, which is authored by me, and which you can place an order and acquire a copy of that for you to refer to. Here we have tried to kind of simplify the. Just a second, if I can. Yes. So this is the section on Taxman website, where you can find this book, UAE Corporate Tax, authored by us. It is now approved for publishing in UAE as well. And this should be available for buying very, very soon. And you'll be able to acquire a copy of this for your reference. We have tried to keep it very simple, but we have brought in all the relevant material together in this book. And we have made it chapter by chapter. We have brought in all the relevant context of law, cabinet decision or ministerial decision in that chapter relevant to that, and then tried explaining each chapter by chapter so that it's easier for you to refer to it and make a reference to it in a very, very detailed manner. So with that, I can now take up whatever questions that you have posted in your chart. Okay, so we have about 6 questions. I'll start first with a question posted by Pranal. In case entity is based out of free trade zone and is engaged in marketing activity which requires traveling outside their office, whether traveling outside FTG could be treated as core activity? No, merely traveling uh, will not disqualify you as long as the employee is still based and has a visa from the free zone, and his main place of work will remain to be the free zone. So that's perfectly fine. Nilesh Bhai or that anonymous attendee, if you can send in your email address, we will try and send this presentation across to you. So please send us your email address on our contacts, and we can give you the presentation copy. Mr. Kulatu Mani Bala Subramaniam, your question is incomplete. Currently, a DMCC company is involved in what? So we'll take it up. On what email ID can I send the email for me to get that flow chart? Please send it on our. So let me put our context slide back up for you to note. Yes, you have the email ID, you have the website, you have the details. Please note it down, and please send your emails on this, and we will try and send it across to you as you may need. Okay. There's a question from you, Shah. Sir, do a free zone entity need to apply corporate tax registration? Corporate tax registration is irrespective of your turnover. and you need to apply for it even if you are not making any turnover. So moment you are a free zone company or a person or a company registered in UAE anywhere, you need to still take a registration. Mr. Kulatu, your question. Currently, DMCC company does activity like high C distribution, corporate services, treasury, uh, third party supplier payment. So all of this you will have to evaluate individually. But for distribution activity, it needs to be in a designated free zone. So if it is the other activities of treasury and headquarter services need not be from a designated free zone. So DMCC can provide HO service and treasury, etc. So you have to carefully do this transition, and you should not get stuck on very importantly on the general anti-avoidance rules. Okay, so that you need to be careful. But beyond that, yes, you can plan properly and take the benefit. Vakar sir, thank you for your comments first of all, and thank you for your appreciation. The tax fiscal year has started for many companies. So do you think all regulations have, sir? The law like VAT is evolving. You can never say that everything has come. There will still be some more things that will keep getting issued from time to time, and it will help us to apply this law more comprehensively going forward. So we can never be saying that everything has come. No, no, things will keep evolving. And so whether excluded activity will be covered under excluded activity means you're taxable. So there's no need to look at de minimis at all. And de minimis does not apply to excluded, it only applies to non-qualifying income. So excluded means taxable, and therefore you cannot even think of getting into any of this. And if one of your activity is excluded, you'll be excluded. You have to look at what is your main activity. If main activity is excluded, you cannot go into the free zone benefit at all. You need to be clear on what you are falling into. Yeah. Vishal Mangnani, what if a designated zone sales good to mainland entity? Yeah, designated zone can sell good to mainland entity, provided what we are all recommending is it's not be have been bought from mainland and being sold to mainland. As long as it is imported and sold to mainland, there's no problem. That's part of distribution service and distribution activity, and that's fine. There's no restriction that you cannot sell at all to the mainland person. In fact, they're saying non-free zone person, which could be mainland or exports. Both are covered. Okay. Nilesh bhai, we have noted your email, but instead I would prefer that if you can send us an email on this address, then we will send you the presentation back. Because this chat will disappear once we close the session. But if you drop the email to us on any of this email, then it will remain with us, and therefore we can address it even later on and send you the presentation. Yeah. So Nilesh bhai and Hardik, please send us the email. Thank you. Okay, Nandini has asked a question. What the tax period in UAE? Okay, so tax period in UAE is flexible. There is no fixed tax period, and therefore you are given an opportunity to follow same period as you follow currently for your financial purposes. And therefore, there is no mandatory requirement to prepare two separate financial, one to meet the tax and other to meet the corporate requirement. If you're So in UAE, in every company's memorandum and those constitution document, they choose the financial year. It's already recorded as such. If you want to change from that, you have to prepare a commercial rationale and why you are changing from a certain period to another. And if you change your statutory document accordingly and change the period, yes, you can change it as long as you have a justifiable reason for that. If it has already started, you may not be able to change for the current period. It may apply only for the next period going forward. So you need to be careful of where you are changing the period or when you are changing. Okay. So Krunal, if organization has hybrid work arrangement, organization has to prove that it has adequate substance in the free zone. The employee visa should be always from the free zone. His reporting place of work should always be that free zone. He may work as per whatever their arrangement is from home or whatever, but he has to be doing only that. And if you can establish that and prove that, then you prove the substance, no problem, right? So it's onus is on you to prove that you are actually meeting the substance requirement. Okay. Thank you, Nilesh Bhai, and thank you, Nandini. Mr. Rikesh, for free zone companies, the audit is mandatory. Whether financial audit is mandatory. Operational audit is at your discretion, whether you want to do it or not. For mainland entities which are not free zone, for them also, if they exceed the turnover by 50 million, the financial audit is mandatory now under corporate tax law. So audits are now becoming mandatory. Already a lot of free zones were insisting, irrespective of your turnover threshold, the audit to be done. So I think that kind of meets requirement, and I think I have covered all of them.